Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of July 29th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week we saw Delaware mortgage rates remained about the same, which, because if you look on the chart on the screen, you can see mortgage bonds were making a run at that falling blue trend line and got turned lower, and then we tried to make another run at the end of the week. So we did have some good news at the end of the week. On Thursday and Friday, the bond did manage to close above the 25-day moving average. That hasn't happened since April. So that's a good technical signal for the mortgage bond to move higher. When the bond moves higher, interest rates move lower. So we are going to recommend floating your Delaware mortgage rate to start the week to see if the bond can make another run at that blue trend line. But again, be cautious because every time we've hit that trend line, the bond is sold off and moved lower. So we're going to need some good news to make that move higher and bust through that, which we may get next week. We've got a lot of news coming out next week. The first one being the Federal Open Market Committee starts their meeting on Tuesday, and on Wednesday they're going to release their monetary policy. The whole world will be watching that. If they mention tapering the bond buying program, which is QE3, quantitative easing round 3, if they mention tapering that as early as September, that would be bad news for mortgage bonds. We would basically sell off, interest rates would spike higher. But if they don't mention tapering and they pretty much say they're going to continue as is into 2014, that would be great news for bonds. You could see a rally higher in the bonds, maybe even break above that falling blue trend line. But the rest of the week, there's some other news which could help us or hurt us. ADP reports payroll on Wednesday, and that's going to lead into a hint at what the jobs report on Friday will have for July's job report. That is going to be huge. If we get a bad jobs report, which we're expecting the jobs report not to be good for July. So if that happens, we would see the bond market rally. That could be enough to break through or smash through that falling blue trend line. The bonds could then be on an upward move, and we could see mortgage interest rates move lower. That could be the summer rally that we usually get in August, but we need something to happen. And if that happens, we could see the stock market sell off, which would again add to that rally. So we are going to recommend floating into next week. As we get more news out, we'll see what happens, but you got to be cautious. On Tuesday, if you've got a rate you like and you're not a gambler, you may want to lock in that rate because, again, on Wednesday, if the monetary policy comes out and mentions tapering, you'll see mortgage rates jump higher. And then we also are going to see GDP release next week. So a lot of news going on. And again, we're expecting GDP not to be that good. If it comes out not that good, that's another favorable report for bonds. All right. In the housing news, new home sales for June 2013 were reported, and they surged higher by 8.3% from June of 2013 at 497,000 sales. That's a tremendous 38% jump from June of 2012. So 2013 to 2012, 38% jump. That's the largest annual increase since 1992. So new construction is booming. If you look around you out there, you're going to see all these new construction signs, new home sites popping up. Builders are building. People are buying. So new construction is taking off. But in the housing news, existing home sales actually disappointed a little bit, came in lower than expected, and they were down 1.2% in June from May. So existing home sales not doing as good as new home sales. In economic news, last week we saw the weekly initial jobless claims released on Thursday, and it jumped higher by 7,000 claims up to 343,000 claims. Initial jobless claims have been a seesaw week to week. Gets better, gets worse, gets better, gets worse. As again, we saw getting worse this week, leading into hopefully a bad jobs report next week, and that would actually make mortgage rates move lower. But we did have good news last week. Consumer sentiment, which is how good consumers are feeling about the economy, came out better than expected at 85.1, and that's basically the highest reading in 6 years. So consumers are feeling pretty good about this economy. Stock market set an all-time record high again last week, so you should see an increase in your 401k. In the local news, the next free first-time homebuyer seminar is in Newark, Delaware, and that is Saturday, August 17th from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for that event by giving us a call in the office at 302-703-0727, or you can register online at www.delawarehomebuyerseminar.com. If you need help getting a free fast pre-approval, need to get help with the down payment assistance program, looking to refinance, give us a call in the office, 302-703-0727, or apply online, www.prmidelaware.com. Look forward to seeing you guys next week.